Hello and welcome. Thank you for joining. My name is Erin Bradshaw, and I am the Chief of Mission Delivery for Patient Advocate Foundation, a national 501c3 nonprofit charity that focuses on identifying and reducing the challenges that individuals like yourself are having around access to care and preservation to financial stability. Today, we'll be exploring the topic, navigating health insurance and employment benefits during and after cancer. During this presentation, I'll cover common workplace benefits, workplace protections, disability options, and an overview of health insurance and tips on how to select the best plan for you. We conducted a survey that represented just over 3,300 patients served by Patient Advocate Foundation between the years of 2018 and 19, and we were interested to learn the impact of their diagnosis on their ability to work. 58% took more than 6 months off of work, with nearly 53% utilizing some sort of disability, whether long or short term. Also, 33% shared that they lost initial insurance coverage, but were eventually able to gain new coverage. This survey really helped shape the discussion on the topics I'll be discussing today, as well as the heavier emphasis on disability and health insurance. Depending on where you are in your cancer journey, workplace benefits will play different roles for you. You might be returning to work after a leave of absence, taking a short or long-term medical leave, or working through treatment, or even have a reduction of hours, or you may find yourself changing jobs. You'll want to familiarize yourself with all the benefit offerings. On the slide before you, you will notice very common benefits that are offered by a lot of employers. Your employer will choose which benefits they offer each year and which financial contributions, if any, that they'll contribute. There's a lot to consider when you're evaluating this package, and it's important for you to look at your personal situation during the onboarding of a new job or during open or special enrollment periods. This will change year over year, and it's a perfect time to assess your current and projected healthcare needs while making these decisions. The most common health benefit is health insurance. Often this is the most affordable way to obtain coverage. Disability income insurance can also replace a percentage of your lost wages should you find yourself having to take time off for medical care. I'm going to discuss these two topics in more detail later in the presentation, but I would like to cover a few more of the benefits that may be available for you that you may consider if you have not already chosen. Supplemental insurance plans help pay for expenses when you have serious illness or an accident, and sometimes these can be beneficial for helping to offset out-of-pocket healthcare costs like deductibles or other out-of-pocket expenses should you be presented with an issue that it covers. There may be a clause if you do not choose this plan upon original offering, so be aware of that and make those considerations at that time. Life insurance can also provide peace of mind that your burial expenses and family will be taken care of. Taking advantage of this benefit during original offering also will allow you to gain coverage without having to disclose prior health conditions that may be applied in the private sector. You might also have an opportunity to roll this benefit over if you were to leave the place of employment to maintain coverage. Fringe benefits are something that is offered as well, and there are non-cash payments that may include tuition assistance or flexible spending, childcare spending accounts that are pre-tax that offer cost savings. And then there are always expanded employee assistance programs, or sometimes called EAPs. They offer support during life's most difficult situations with a variety of different support services and often have no cost to you, but are also often forgotten. So if you have this benefit, I encourage you to review it and see how it offers value to you. For instance, you might find that they offer no-cost therapy sessions or reduced legal resources. And then, of course, PTO or paid leave are valuable resources that may be joined with workplace protections when you need to take time for medical treatment. There are federal and state workplace protections and employer policies that can work together. However, depending on which laws apply to you, the states you live in, and the size of benefit offerings to your employer, this will look a little different for everyone. You're not required to tell your employer of your loved one's cancer diagnosis. However, there are good reasons to share. So you should access these protections and are not subject to employer policies such as excessive absences that might cause a termination, for example. The key is to maintain employment to keep these valuable benefits in place, including health insurance, while undergoing any type of treatment. I'm going to talk a little bit more specifically about the American with Disabilities Act and family medical leave. The American with Disabilities Act applies to private employers of 15 or more employees, as well as state and local governments. If you work for a smaller employer, there's a potential opportunity that a state has also implemented an employment law. It is illegal to fire someone because of cancer diagnosis, and employers must provide reasonable accommodations for employees who have cancer. These reasonable accommodations can be anything from a modification in schedule, a workplace environment, a use of technology, telecommuting, and more. Like the ADA, the Federal Rehabilitation Act provides employers with discrimination against their employees because they have cancer. This act, however, only applies to those in the federal government, as well as the private and public employees that are offered public funds. The Family Medical Leave Act, or often coined as FMLA, is a federal law that provides eligible employees up to 12 weeks of unpaid leave, but job-protected leave per year. The reason why this is important is that, one, it really guarantees up to 12 weeks of unpaid leave that can be used once or in increment as short as a few hours at a time. It also guarantees that you maintain your health insurance and that you are given your previous position or equivalent job with the same salary and benefits and other conditions of employment upon return. There are some qualifications to this law. An employee must work for his or her employer for at least 12 months, including at least 1,250 hours during the most recent 12 months, and the law applies to workers of all government agencies and schools nationwide, as well as private companies with 50 or more employees within a 75-mile radius. Even with these legal protections, it's important to prepare for telling your employer of your diagnosis. When you're thinking about taking time off, you'll need to understand the various options and learn if they're available to you. There are a lot of details with using these laws, and I encourage you to dig a little deeper as if you need them. I'm going to spend a little more time on disability based on the survey results and how different variations of disability are offered. The inability to work can create personal financial hardship, and disability insurance can work as a financial safety net if your diagnosis makes it difficult to maintain employment. Just like car insurance, you hope you don't have to use it, but it's a source and a support should you need it. Disability benefits can be purchased directly from a private insurance company. Think of something like an Aflac, or it can be offered by an employer or independent agent. Short-term and long-term disability often fall in those categories. State disability is an option, and I'll discuss that later. And also, there are federal government benefits through Social Security disability. If offered through your employer, it is very important to sign up during initial enrollment period so you cannot be denied coverage for a pre-existing health condition. So short-term disability policies are exactly as the title states. These policies have a limited time and will cease payment once you have reached that time limit, even if you're still disabled. They pay a percentage of your base salary, which you can see here is an average between 40 and 70% on however it's defined. And if you're not eligible to purchase disability through your employer, you may want to consider looking at it through an individual policy for that protection. They are administered by large commercial insurers, and they sell all different types and eligibility with limitations and payouts. Long-term disability are similar to short-term disability, however, are intended to begin after a longer wait period and often were designed to work after a short-term plan had terminated. Most long-term companies require you to apply for Social Security disability benefits and may help with the application process. Your policy provides what is known as an offset, which means any benefit you receive from Social Security, if awarded, would be reducing the benefit paid by your long-term carrier, and the maximum you receive would be the top of the long-term benefit that you are receiving. An advantage of being enrolled in Social Security while receiving long-term is that it can help you become eligible for insurance products like Medicare or Medicaid if you're eligible. It is also important to note that if you are approved for Social Security and receive a retrospective payment check, it's not atypical that they would require you to provide that retrospective payment back to the long-term carrier. So state disability is offered in only 5 states at this time, but it's a great opportunity for those that benefit from it. They are state-sponsored disability plans that are funded by mandatory contributions by its employees. The states that have it today are California, Hawaii, New Jersey, New York, and Rhode Island. Each state has different disability eligibility guidelines and details on how their programs are administered, including how long you have to work for that employer, how long you have been disabled before you can apply for benefits, and what percentage of your salary is payable out. Social Security disability is a federal program administered by the Social Security Administration. They provide benefits to people that are limited by a total disability. Disability has two programs within it. Social Security Disability, which is SSDI, is funded by taxes and available to those who have a work history and earn enough credits. And Supplemental Security Income is a program designed to assist low-income individuals who have never worked or do not have enough worked credits but do meet the eligibility guidelines of disability. Social Security defines disability as you must not be able to engage in any substantial gainful activity because of a medically determined physical or mental impairment. They do expect that to last for more than 12 consecutive months or longer, and in order to be eligible. There is a compassionate allowance program available to Social Security that is a determination where certain diseases or medical conditions have been determined for quick decision and approval. However, if you don't meet those guidelines, you will have to go through the traditional application process, and it isn't uncommon for that process to take months to years. If you're considering returning to work after being out on long-term disability, it really is a personal decision that should be discussed with your treating doctors. Together, you need to determine if you reasonably can return to work, and while you're out of work, pay attention to the approved timelines that you're eligible for the disability products. If you have to use PTO or family medical leave, it's important that you remain in communication with that employer so that they're aware of your intentions. You may consider speaking to a lawyer or professional to understand your disability policies and laws as well. If you're on long-term disability, you should also review the policy and understand the benefits that it offers. It will outline steps that you need to do to complete the return of your position or whether or not your disability benefit will continue once you have resumed work. One of the areas that you want to look for is called an occupational clause. There are two different types: an own occupational clause, which is when you receive employer disability benefits if your medical condition prevents you from fulfilling the responsibilities of your particular job, and an any occupational clause is when you receive benefits if your medical condition prevents you fulfilling the responsibilities of any job. These clauses determine when and how you are able to receive disability benefits from your employer. And then when we look at Social Security Disability, they also have a back to work program. It's called Ticket to Work, and it's designed to help disabled people who are on Social Security Disability return. While enrolled in this program, you'll be allowed to maintain your disability benefits for a certain period of time while working to really test and trial to make sure that you're capable and able to continue on. And if there are any complications or your diagnosis prevents you from returning, you do not have to reapply for Social Security. I'm going to discuss health insurance. So choosing the right plan of health insurance policy for you and your family is really, really important. If you're in the wrong type of plan, you may end up paying way more than you should for care. No matter what source of health insurance benefits, every year you'll have an open enrollment period where you'll have an opportunity to make these changes. Before you go into the same insurance plan, make sure you look at this and what kinds of medical needs that your family currently has and what you are projecting you might need in the future. With a diagnosis of cancer, make sure you choose the plan that covers the providers, the hospitals that you want to be treated at. Also look at medications and treatments that you know that you might need to ensure that there are no limitations or formulary limitations. And when you're looking for plans, don't get too focused on the premium, which is the monthly cost, but make sure you look at the overall cost associated to the plan, including deductibles and the amount that you have to pay out of pocket for services covered before your insurance pays. Other factors to look at are out-of-pocket maximums, which is the most that you would pay in a policy per year for covered services. So I'm going to dig a little bit deeper here on where you could potentially locate coverage. So the focus is obviously on employment, as we know that most Americans obtain their insurance coverage this way. The benefit of this for most people is that the employer and the employees share the monthly premium, making it cheaper for some than some of the other options. If you aren't sure that you're eligible for coverage through your employer, try reaching out to your Human Resources Department and they should be able to guide you. But if you're not working or ineligible for your employer's benefits, you would want to consider, if you're married or have a partner, their benefits offered at their employment as an alternative. Human Resources is a great place to start. as well. Also, if you're under the age of 26 and your parents have agreed, you may be able to seek coverage under one of their employee-based benefits that was instituted by the Affordable Care Act to give young adults the opportunity to maintain coverage when they may not have affordable or access in their current employment. Another option may be an individual market. You can research your policy choices on the federal health insurance marketplace, or depending on where you live, the state might have their own. Either way, you can visit healthcare.gov and the site will direct you to where you need to find the available options to you. Depending on your income and your household size and some other factors, you may qualify for a premium tax credit, which lowers the amount you pay each month for insurance plans. You do have the opportunity as well to reach out to an insurance broker or agent, an online insurance seller, or directly to the insurance company to find out other offerings that might be for you. Protections normally lie within your employer benefit and then under the Affordable Care Act marketplace plan, and you should be cautious of those that you're able to get through an insurance broker to ensure that there are no limitations or short-term policies or exclusions to a health condition you might have. Another option is Medicare, which is a type of government-sponsored health insurance for people 65 and older, and some people eligible under the age of 65 if they've been certified disabled by Social Security Administration after a 24-month wait period. If you have questions about disability for Medicare, you can reach out to Medicare directly or Social Security on your questions. Medicaid is a type of health insurance that is funded jointly by states and federal government and has a different name in every state. Like California, for instance, is called Medi-Cal, and in Maine, they call it MaineCare. However, it is referring to all states' Medicaid program, which is those individuals states plan to administer. That means whoever's eligible, what benefits are offered, and other details about how the program is run differs by state. Medicaid is designed for adults who have low income, pregnant women, children, and parents of Medicaid-eligible children, and low-income seniors and disabled adults. Since states do run their programs uniquely, it's best to contact your local Department of Social Services for more information and application. And if they don't handle the program in your area, you can direct to Patient Advocate Foundation to help you support you as well. The Children's Health Insurance Plan provides low-cost health insurance to children with families that earn too much to qualify for Medicaid. And in some states, the CHIP program covers pregnant women as well. Again, every state is unique, and it's important for you to pay attention to your state's eligibility for guidelines. Best note is if you don't know, apply, and they will do that evaluation for you. One note as well is that Medicaid, because they have determined their eligibility guidelines, some states did institute what they're calling a Medicaid expansion under the Affordable Care Act. So there's a larger range of income that is accepted and you can qualify, whereas other states have not. For the last two options, you can fill out an application for the health insurance marketplace as well, so healthcare.gov. So that's a great landing page for you to explore the individual marketplace, Medicaid programs, and for anyone in your household that qualifies, they'll send you information. There are other plans as well. TRICARE provides health benefits for the U.S. military personnel, retirees, and their dependents. The VA benefits are also available for any veteran. It's a little tricky here though, because veteran benefits are not technically insurance. However, veterans can get care in the Veterans Healthcare System. It's tricky because they are not covered if they seek care outside the VA facility unless they have an alternative coverage and or has been organized by internally the VA facility themselves. You also have an option to purchase insurance through a union, alumni, association, or professional organization. Association health plans allow members of groups or professions to band together and negotiate better premiums for their members. It's similar to how an employer-sponsored plan would work for you, and the members of the association or group do not work for the same employer. Instead, they share the same industry, interest, or common thread. This is often a place where someone who's self-employed or has a small business might find an opportunity through. If you lose your health benefits, you may be eligible to continue a group plan provided through your job or for a limited period of time under certain circumstances. This is called COBRA, and it is for qualified individuals, and they would have to pay the entire premium and sometimes up to a 2% addition to cover the cost of administrating the COBRA plan. Now with the opportunity of marketplace plans, many people are learning that that's an alternative option and sometimes more affordable than moving into a COBRA plan. However, one of the things to consider is if you're mid-treatment and transitioning to a COBRA plan, if you've already met your deductible and out-of-pocket cost, you may want to continue that plan until qualifying opportunity to register for something else to have some cost savings, even if the premium is more. So there are different health insurance types, and this is really a preference that you all have to decide. Chronic conditions could require regular medications or more frequent doctor appointments and even costly hospital stays or surgeries. So considering the health plan that helps minimize your out-of-pocket costs based on what you anticipate for this is key. So a little bit of time spending to plan on helping you choose the right type of plan is important. So when you consider the flexibility you seek for the providers and hospitals, they all should be weighed in. So for instance, a PPO provides the most open network and the ability to remove the need to get a referral from your primary care doctor to a specialist. They don't require the referrals, and they do allow for out-of-network care, but there is an out-of-pocket cost associated that's higher than your negotiated rate. If you look at Health Maintenance Organization, or HMO, and an Exclusive Provider Organization, or EPO, they operate very similar. The care is coordinated through a primary care, and you're required to get referrals to any kind of specialist or any type of care except a true emergency. And typically, they do not cover care received outside their network providers and hospitals. The point of service plan, or POS, is a combination of a PPO and an HMO model. And you do need to get a primary care with referrals. The provider network is usually smaller than a PPO. And the difference is that they do allow you to use out-of-network providers. But again, the reimbursement rate is lower. I draw your attention to high deductible health plans, because there are, while they can be any of these four plans above, they're characterized by lower premiums and higher deductibles than traditional health plans. They have a minimum deductible requirement for having a health and savings account, which I'll be speaking about in a moment, and they're responsible for most healthcare costs until you have met the deductible, except for prevention services. You're still required to pay your copays and your coinsurance for medical and prescription, but you would pay out of pocket up to the cap of your deductible until the insurance paid any claims. So this is how pre-taxed employee savings accounts can be of value. So if you have a high deductible if you have a high deductible insurance plan, a health savings account could be a good benefit for you. It allows you to contribute pre-tax dollars to help pay those out-of-pocket medical expenses during the year and can help you project and budget towards anticipated cost. So if you expect to save around 20 to 25% in taxes on every dollar you put in, and that of course is based on your personal income, and as your income rises, your savings increases as well. Employees and employers may contribute into these accounts. The HSA may be only used in combination with what's considered a qualifying high deductible plan. And with that cheaper premium, you would be smart to consider taking the difference and putting that into a health savings account that you would have been paying if you chose a traditional plan to help with those expected costs should you need to pay them. There is a limit on the maximum contributions you can give each year, though, so it's really important that you stay within that and you look at what your employer is contributing to it, as well as what you're contributing, that you do not go over and gain any penalties from the IRS. But this is a great way and a great vehicle to save on premium differences and have some sources of income to pay for those out-of-pocket costs. A flexible savings account is different. It's set up by your employer and can be for certain out-of-pocket medical expenses or dependent care that you don't pay taxes on. They are plans that are great options as long as you have somewhat of a predictable medical expense each year and or dependent care like child care and such. I think you just need the variable and the differences is here are a health savings account allows you to contribute each year, and will allow you to roll year over year if you don't utilize it. A flexible savings account does have a use it or lose it provision, which means that you must use it by the term of the year, and if you don't, then you're at risk of losing what you have contributed. So I think, I've shared earlier on and through the presentation, there's been a common theme of open enrollment. I wanted to spend a little bit time just talking about this. The time of the year really can influence your insurance options that are available of you. And so open enrollment is a time each year when you can shop for insurance. And it's very important for you to look at your choices during this time and how it will affect you for the full year coming. Open enrollment periods do vary, and they can be anywhere from 2 weeks to a few months long. So it's really important to pay attention to that. Changes that you make during this time will go into effect in the next plan year, and generally open enrollment for Medicare and health insurance marketplaces fall between the October and December period. Because we're talking to you today, I will share that the Medicare open enrollment period is right now. It started October 15th and will end December 7th for a January 2021 effective date. The marketplace is coming soon. So all of your insurance options available in the individual market through healthcare.gov is going to open November 1st and it will end December 15th for a January 1, 2021 start date. Your employer might mimic that time frame for their open enrollment, or it could be completely different. If you're not sure when your workplace offers this, contact your human resources, but they should be open communication for you. And it would be often, when your deductibles are met and when they roll again, but what you need to understand is when they open up that opportunity for you to consider changes. If you miss open enrollment, there may be a way to still enroll into benefits if you have a major life change called a qualifying life event. At this point, you might qualify for what's called special enrollment period. However, this must be done as soon as possible after the event takes place. Often it's required that you make the change coverage within 60 days of that qualifying event. So for example, if you get married or divorced, give birth to or adopt a baby, lose your employer coverage or a new job, you will turn 26 and age off your parents' plan, or become a U.S. citizen, get out of jail or prison, or lose your eligibility for your state's Medicaid or CHIP program, those would be considered eligible qualifying events. If you choose to voluntarily drop your coverage or decide that you don't want to or can't pay your premiums anymore and lose your coverage, you will not be eligible for a special enrollment period. And if you do end up getting coverage through the special enrollment period, you may end up only having coverage for the part of the year. For example, if you get coverage through a special enrollment period in January, but the open enrollment is in June, you will have coverage from January to June. And at that point, you'll have an opportunity to evaluate your plan again and make a selection for your next plan year. If you're outside the open enrollment and you do not qualify for a special enrollment period, that can limit your options. However, you may still be able to get coverage through a private insurance plan or Medicaid, which does not rely on open enrollment periods and allow you to apply each year. So there are a few takeaways from this presentation, and the biggest one is employer options do vary, and some have numerous choices and others do not. Take the time to evaluate your options and consider all benefits at the start of a new employer and every year thereafter. When selecting health insurance plans, don't just look at the monthly premium, consider the worst case scenario in your health, an evaluation of costs and benefits, and include out-of-pocket maximums. Review all offered benefits and options outside your employer to include your spouse, and make the best decision for you. If you're happy with your plan selection today, that's great, but please review your available options during open enrollment. You might find there's a change or there's a better option for you. If you're unsure, there is help to help choose a plan. Contact your Human Resources Department, an assister at the marketplace, or even us, Patient Advocate Foundation, to help you navigate. Thank you for this opportunity, and I really am looking forward to taking questions from you all that you might have. We do have a host of educational materials at our website at patientadvocate.org. We also offer one-on-one navigation support should you be dealing with access or affordability issues, or just simply have some concerns around the topics we talked today. You can call us at 800-532-5274 or link for request at patientadvocate.org. So I will thank you for today and look forward to talking further about any questions you might have. Okay, hi, this is Erin. Thank you so much for listening to my presentation today. I noticed some questions that were coming in throughout the presentation and thought I would start with some of them, but feel free to continue to chat or send some specific questions within as well that we can discuss during the duration of the rest of our presentation. So I'll start with one of you had asked that you're currently on SSI and getting paid by the employee because of COVID and wanted to know if that would have impact on the benefit. So it's a multi-layered question, so I'm going to answer them separately. SSI is considered supplemental security income replacement, and that is one of the benefits offered by Social Security. Then you have Social Security disability income as well. If it is SSI, then they will be looking at the income coming into the home because it's a need-based benefit, and will do an evaluation on eligibility based on that income. The second layer of the question is, I have health insurance now, but what happens when I get dismissed or lose that benefit? How can I be sure that I can get good medical insurance with my cancer history? So if you find yourself in a position where you're an employer-based plan, or any plan for that matter, and you're going to be moving off that product, you will be entering into a special enrollment period, which is 60 days. That will allow you the opportunity to look into benefits available to you outside the normal open enrollment period. Some individuals do elect COBRA health insurance if eligible to them through their employer. Others might look at the marketplace insurance products and application for those. Depending on your financial situation, you might qualify for tax credits, or also called subsidies, that could reduce the premium and out-of-pocket costs that you might be subject to, and maybe a more affordable means. And then, of course, you can always evaluate state assistance programs, and depending on how you are transitioning off, and depending on disability status and or age, there's always Medicare. And then the other question was, how long does your employer cover your medical expenses? And that's going to be reflective of how long you're considered an employee of that employer, and how long they maintain your health insurance and eligibility for insurance premium coverage. Oftentimes, if you're under the protection of family medical leave, it is reflective of that. Sometimes your disability plans will also enroll those kind of policies and procedures, but ultimately after those, it's dependent on each individual employer on how long they maintain. And then there's a question about what do you do if your oncologist does not take your government health plan? And that is, so every provider and provider location can determine what health plans that they would be considered participating providers with. You can always speak to them to see if they're open to enrolling into a new insurance plan. And if not, you may have to find alternative insurance coverage and or seek a different type of provider that does accept your insurance plan. I'd work closely with the oncologist that you are comfortable with and see if there's maybe an opportunity within the same system, or one that they would recommend. So there's a question as well around long-term disability and Social Security disability income. And so this person is thinking about going back to work, and they're concerned about their long-term disability plan. As I shared in the presentation, there is a Get Back to Work program through Social Security disability, and as they state in their message, they're not as concerned with that, but more concerned about the long-term plan, which really fills in that gap and that added income. If you're going back to the same employer, I would evaluate your current long-term disability plan to see if there is a going to back work provision that would work with you and give you eligibility. If you're seeking a new employer, it would be really important to enroll at the beginning of your onboarding, where you're less likely to have any imposed restrictions around insurability. But I would definitely inquire and learn if there is any kind of waiting periods or waivers that are instituted. But traditionally, employer based plans will allow you to enroll without any medical review. And the same thing applies for life insurance when you're first um, going back to employment. There was another question about what happens if your employer doesn't offer long term disability? What are your options for getting a long term plan with a pre existing health condition? So, unfortunately, in this situation, you are probably going to be very unlikely to find a long term plan through a private sector that would insure you. And if they did insure you, they would likely exclude the diagnosis that you already have. So your best opportunities for that are through an employer-based group plan. However, that being said, depending on where you are in your health journey, you might find that you do qualify for Social Security disability, which is a federal benefit that you either have put work credits into or you would qualify based on the definition of disability and income. Okay, so there's some others coming in. So there was a question about, the cost associated to health plans, and indeed, they definitely, regardless of how you apply, the benefits, especially under the marketplace plan, are simply based on your location and your what kind of benefit package you're looking at, regardless of how your diagnosis is. But I do agree that premiums and out-of-pocket costs and the design of plans can be pretty costly. Trying to evaluate them from a larger picture. So looking at what's important to you, what coverage that you're seeking, how large of a network you want to be able to access, um, as well as the projected treatments and treatments that you're currently in to ensure that you have your network doctors, but also looking at what your monthly premiums are against your out-of-pocket costs. So what would your co-pays or co-insurance and deductibles, and then looking at your major max and kind of evaluating them as collectively and determine sometimes a lower premium might mean you pay more out-of-pocket overall because you pay little bits of time or have a higher deductible or something of that tune. So um, and then, there are resources to try to help with those out of pocket costs. So maybe there are some assistance programs to offset some medication needs, charitable assistance programs, or charitable assistance programs through hospitals, or even a Medicaid as a secondary. So I think it's important to evaluate your personal situation and see what that is on top of the benefits itself. And there is a question as well about, what can we expect as we move into 2021 with the Supreme Court ruling? And it's really hard to say at this point. I think we're following it very closely, and it will be important for us to, monitor that. I don't expect anything to happen overnight. Any kind of changes would definitely be in the forefront. So as you're looking at your benefits now, whether you are in open enrollment period of marketplace or the plans that you have, the best bet is to just keep that information and review it. But there isn't really much I can share at the moment. Okay, please, if there are other things that you would like to ask me, please feel free to send in. Um, I know this topic can be complicated, and oftentimes, there are very unique situations that you personally are going through. So I just want to draw attention to the fact that we do offer one-on-one case management support. You can always reach us at any time. We have a colorectal care line that's very targeted towards that diagnosis, and we help many, many other health conditions as well. So you can even always call us at 800-532-5274. You can review all of our information online at patientadvocate.org. We really want to meet you where you're at. Okay, so there looks like a couple more questions have come in. So the question is, can you have a partial disability and have life insurance? So your life insurance plans, if you get them through your employer, again, if you enroll upon initial eligibility, You're not subject to a pre-existing health condition. If you choose to elect them later or want to increase the amount that's covered, you're likely going to be subject to a medical review, which a determination may be made by that insurer on whether or not they would honor that. So it really isn't necessarily associated to the disability aspect, but it can be like a health condition from cancer that we're talking about today, or something like a heart condition or other ailments like diabetes that would be reviewed. Okay, there's always another one. I just won my case for disability and will be starting Medicare in 2021. I heard you should get a secondary insurance. This is a great question. Um, you you are going to be looking at your own personal needs, but I will just say this, that you're going to be eligible for um, a supplemental insurance plan, and it is really important to evaluate those benefits. So, and there's a difference between a Medicare Advantage plan and a Medicare supplemental plan. And I'll just spend a little bit of time on that because I think it is something that you really should pay attention to. So, when you become eligible for Medicare, you're going to get a red, white, and blue card, Medicare A, B. And then you're going to pay an out of pocket premium for your Part B. Then what will happen is that that way that that is designed is that you'll have some coverage for hospitalization, and then Part B is your inpatient and doctors and things of that nature. At the way that it's designed today is that you're going to have a 20% out of pocket cost associated to the care throughout the year. And where a supplemental plan can be of great value and benefit, especially as we're talking to you today, as you are undergoing your colorectal cancer journey, is that that premium and that support could offset those costs and those charges that you're going to be subject to, and ultimately help pay towards them. So where it is important to pay attention is as you log in and realize their alphabet, just like, so it's the A through G, J, F, J, and I think there's some variation right now. So, but what it is that you'll look at them and you'll notice that the coverage benefit is dependent on what you select. Typically speaking, the higher you go in the alphabet is the more stronger of the plans and they cost more. But by looking at that, if you know or you have a projection of your health and your and what kind of out-of-pocket costs that you might have, and or you just want that security blanket of that and all care that you have, do an analysis of what that out-of-pocket cost is and what you would be paying out of pocket potentially if you were to have an indefinite co-insurance. So it is a great time, and there are pockets of time where you can enroll into those benefits with no pre-existing clause, and that is within the first 6 months of your eligibility, which is why it's key. And if you became eligible because of a disability, you have that enrollment period, and you also would have it again when you turn 65. After that, it is subjective, and it would be dependent on the insurer and whether or not they would allow you to enroll without a pre-existing clause. So I strongly encourage that you evaluate that. That is something that we can certainly support you with and help you kind of look at the plans and the best options, as well, and look at, you know, any kind of support that there might be out there for you. Okay. What if you're getting, okay, sorry, they came, let's see.
Any other closing comments, Aaron?
Yeah, so I appreciate that. So I apologize. It looks like my video conferencing wasn't coming through, so you get to see my lovely photo. But I just want to share that, as you're navigating your journey, whether it's you personally or someone that you love or care for, just recognize that we're a resource for you. And we do understand that there are differences and things that apply. And this is a very complicated topic. So we stand there to support you if you need that. And just, I'm just very grateful to have the opportunity to be a guest speaker today. Um, our contact information was enclosed. If something was to arise later and you have additional questions or support needs, don't hesitate to reach out to myself or to the organization directly. But I want to thank you and everyone for your time today. It's been a pleasure.